Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, he's a big investor, but he's over the boat envy. He rubbishes trickle-down economics, and he's also a big believer in industry super. Venture capitalist Mark Carnegie joins me live, and I ask him what he would do if he ran the country. And trust me, it's the right question. Donald Trump ticks off another promise, delivering a better deal on NAFTA, he says. So is this a sign that global protectionism is a passing phase, or is the China-US trade war the true sign of the times? The Payne Report's Jonathan Payne brings his perspective on trade. And a speech on the sidelines of the Tory party conference in Britain has tongues wagging. Was this a bid for the leadership by Boris Johnson, or has he left it all too late? We go live to London with Michael Hewson. Now, first of all, let's talk about inequality and wages. Wages of the haves and the have-nots. Overnight came the news that online retail titan Amazon was raising the minimum wage it was offering for 250,000 of its US workers, raising it from $11 an hour to 15, which is quite a jump. The news got the big thumbs up from a longtime critic, one of the great American class warriors, Bernie Sanders. He tweeted, "Congratulations to the 350,000 Amazon workers who will now receive $15 an hour. Thank you to the movement which is sweeping the country. Today is not only enormously important for the workers, it could be a shot heard around the world." Well, the pressure is now on other bricks and mortar retailers in the US, like Walmart, to match Amazon. But as we found out last week, Amazon is no longer a pure retail play, not by a long shot. Well over half the value of Amazon is now in the cloud services provider Amazon Web Services, that's spitting off cash and much better placed for a wage rise. Well, this is clever play by Amazon, whose chief, Jeff Bezos, is at war with Donald Trump. The president reckons Amazon pays ridiculously low taxes, is screwing the US Postal Service that employs good Americans, and also reckons that Jeff Bezos uses his Washington Post to smear him with fake news. Amazon, in return, like a good corporate citizen, will now lobby for a rise in the national minimum wage in the US, which is just $7.25 an hour and hasn't shifted in years. Now, if that happens, you'd think there might be upward pressure on wages in the US. Well, what a different picture here. As we head into our election, wages for workers are in the doldrums, while costs like electricity prices have soared. It's, of course, hit a raw nerve with voters, and some quick fix policy on the run from government, which has ejected the bipartisan energy policy, the NEG. And while a recent report in Australia showed that income inequality isn't getting worse, well, we had the eco-rats cheering at that, it's also true that wealth inequality is very much a reality, and that's largely thanks to trying to fix the GFC, the financial crisis, with incredibly low rates and money printing by central banks. The winners have been those owning property and indeed other assets. Now, the Royal Commission finds greed at the heart of appalling behaviour in our big banks. A greed at Gordon Gekko levels, we hear. So, into this week, Labour launches a new policy. If it gets into government next year, Labour will make all listed companies report the ratio of their chief executive's pay to that of a lowly worker. In many companies, that's a big multiple. Now, what should we think of this? Would Labour curb excessive CEO pay, ensure Australia gets a pay rise? Or is it just class envy played up for an election? Well, a CEO could earn, say, 50 times the median worker. How could he possibly be worth that? What if, though, without that CEO, the company didn't grow? It actually went backwards, meaning it couldn't pay workers more and it couldn't pay shareholders dividends, and the share price plummeted. Well, then take a guy like Mike Cain at Boral, who's paid almost $5 million a year according to the newly minted 2018 annual report. Now, since 2012, when he took the top job, that share price has doubled. Dividends paid, a massive $3 billion plus takeover sewn up. Now, he's grown the company and delivered jobs. So how many labourers is he worth? 5? 50? 100? And what about comparing post-tax salaries of top execs, because they'd be paying the top rate? Well, no doubt the Royal Commission has revealed how some of the top have let the side down badly. And if this Labour policy gets traction on the campaign trail, I think you can bet quite safely that the Morrison government will be looking at matching Labour, and all the complexity and nuance to this debate will be for the birds. Well, just on policy, and tampons and pads will be GST free from January next year after state and territory treasurers agreed to scrap the tax. But there's less agreement on legislation for the government's new GST carve-up, with Labour and Liberal states uniting in a push for the upcoming bill to be amended.
18 years after the GST was first placed on feminine hygiene products, the tampon tax will now be axed. State treasurers agreeing to a federal government proposal to scrap the tax by January 2019.
Common sense has prevailed, and this reform, led by the federal government, is long overdue.
Joe Hockey first tried to do this in 2015, but he didn't have the support of the states and territories. Now they are all on board, and it seems everybody is taking credit.
Labor led the way on this, and we're delighted that the Liberal government has followed.
We put it on the agenda, and we're really delighted that everyone's come on board to scrap what is an unfair tax.
And I'm really pleased to be having the Greens having led the charge for all of those 18 years and to finally get the outcome that we have achieved today.
While there was deafening agreement on scrapping the tampon tax and therefore reducing the size of the overall GST pie, there is furious disagreement on how that pie should be shared out, with the federal government looking to legislate a GST floor for Western Australia. This has led to the other states all teaming up, saying they want legislative provisions to say they won't be worse off under this deal.
No state or territory be worse off, and the only way that can occur, or we can have confidence in that, is in circumstances where that clause is put through in the legislation.
All states and territories, can I reinforce that, all states and territories have agreed to the principle.
And we want the Commonwealth Government to come to the party.
A guarantee would provide us with that certainty moving forward.
We will not support the Commonwealth's legislation, the Commonwealth Parliament, unless there is an amendment to put the guarantee in place.
We've got $1 billion a year indexed forever to ensure that no state and territory will, in fact, they'll all be better off.
The Prime Minister doesn't need the support of state treasurers or state premiers to pass this legislation. He does need the support of the Labor Party. Chris Bowen has indicated Labor will support this legislation but seek the amendments the state treasurers are wanting. James O'Doherty, Sky News, Canberra.
Well, now let's go back to wages inequality, and my first guest is someone who might not agree with me on the high value of CEOs. He's certainly concerned about the wealth gap. Mark Carnegie is a venture capitalist, philanthropist, and just occasionally lobs one over the bows on public policy. He's also big on not-for-profit industry super funds and the notion of a universal basic income. Mark joins me at the desk now. Mark, welcome.
Thank you, Ticky.
Right, now, I was ranting just before and saying that Labour's policy of deciding to go public, were it to take on government, to go public and make companies basically disclose the multiple of the CEO salary with the median of their employees. Now, you support this, obviously, because I saw you retweeting Andrew Lee. Why do you support it?
So, ultimately, I've got a different view about remuneration to other people. In the end, I believe we are apes, and really a huge amount of what we do is about finding relative positions in a primate status hierarchy. And then what happens is, given that everybody just wants to get paid a little bit more than the next guy, things go wildly out of control. Bubbles are formed. Clearly, in 100 years, they'll look back and say the bubble in CEO remuneration was absolutely out of control. So
it got out of whack. It's got out of whack.
It is unequivocally, and therefore I think sunlight is the best disinfectant, and putting it out there is really important. What you've got to remember at the moment is you pay a whole lot of remuneration consultants to tell you what the market is, and everybody wants to be in the top quartile of who's getting paid because they want to think they're best CEOs, etc. The whole thing is just a farce.
Shouldn't a boss, though, of some companies be worth many times a worker? I mean, you can't put...
Well, sure, but the question is it 20 times or 20,000 times?
Yeah, isn't it just...
It's not...
So it's not what the market's prepared to pay?
It's just the whole thing is an out-and-out rort.
So
and I think people are far more pissed about giving big chunks to underperforming CEOs than they are paying for outperformers.
Now,
and
the word there is underperforming, right? So why not?
Yeah, but half the people underperform by definition, Ticky. That is the fact.
Yes,
right?
but you can...
So show me, tell me how many remuneration committees say, actually, we're happy to pay you at the bottom half of the range. The answer is 99% want to be in the top quarter. So the whole thing is just mathematically farcical.
OK, so why don't these remuneration committees actually go for paying CEOs when they do well and not paying them or clawing it back? Why don't we redesign that? Why do we have to have some sort of shaming multiple, which may or may not make sense?
But the answer is, you can have any system you like, right? But you need to realise that all of the economic incentives, as witnessed in a different area, are for rorting, right? That's just a fact. This matters a shitload to the remuneration consultants, and it matters a huge amount to the CEOs, and the overall shareholders don't give it a second's thought.
What do you
so
think
it's
would
just
happen
designed for rorting.
What do you think it would happen if Labor's policy came in?
I think in the end you're probably going to get the wage inequality gap to shrink over time, and somebody will have called time on how out of whack this is.
What's your observation on the Royal Commission so far into the financial services sector?
I think that actually the conversation is turning out to be a really mature one, which is clearly things went absolutely out of control, and clearly people are having it's the financial services industry has been red carded, no question. Now we're having a mature debate about whether yet more regulation, which again is going to be gamed and rorted by the system, is actually going to achieve what we want to do, or is that going to just find some way to suddenly withdraw a huge amount of credit from the market, create a whole set of incentives that mean that silly things get done? And I think that's a mature conversation.
So what's the answer, do you think? What's the direction we should go? And if not more regulation, is it actually penalising our leaders who go wrong, penalising individuals? Is that the way to put people off?
I mean, maybe this is one of the few times where we agree, which will be a surprise. But if I go back to Britain in the 70s and 80s, where they had principles-based approach to these things, where you say actually somebody's financial incentives are linked to somebody's the long-term financial incentives of your clients, and there is a principle where you can't let your duty to your your customers conflict with your financial interest. Some basic principles that have lasted 500 years in British estates and trust planning seem to me to be so much better. The idea that you can bury in the 300 pages of waivers and exclusions an ability to rort your client seems to me to be absolutely egregious and needs to get addressed in the Royal Commission. I mean, I don't know whether you've ever had to try and read some of this stuff. It's impossible to read, and I'm meant to know what I'm doing about trying to understand what somebody is allowed to do to you if you put your money in a trust.
So Mark, you're talking about the long term. We've got $2.7 trillion of super now. The industry funds have overtaken retail funds in terms of the chunk of that they now are in charge of. What should be done with that money?
Well,
How should it be invested?
Well, I think we're having a series of very, very rational, mature conversations about that. Everybody acknowledges that at some level or other, first and most important is it's being invested in a way that's going to get the best outcome for people in retirement. So that is a big chunk of the equation. The second part is, because of a thing called home country bias, a huge amount of the money is going to just inevitably end up in Australia. And then what you don't want is individual people jockeying for sort of slight 1% outperformance over 6 months, you want that pool of capital to think about how to make Australia the best possible place. And
well, we've got people like Anthony Pratt sort of pushing the idea, Gary Weaven pushing the idea of lending direct some of this super money to business. But the industry funds are very nervous about that.
No, they're not. They're getting ready to go. It just takes a long time. They didn't have a good experience with ME Bank and stuff like that.
Yeah.
But they are getting ready to do this. And the truth is the Royal Commission has essentially said somewhere between a quarter and a third of Australian lending is going to have to be mediated through a different path other than the big banks, and it's naturally going to be the super funds.
Yeah.
How it actually functions, I don't know the details of it, but I think policy settings, which is we're going to have the industry funds be a competitive force in lending to the big banks. That's going to happen. That's going to happen.
What do you make of this election campaign as we're running into it now, and the new Morrison ministry, and the way there seems to be a lot of very quick policy decisions and less thinking, I would say, given the throw out of the NEG on reform?
Well, I think this guy's trying to win an election and he's trying to work out what it's going to take. So he needed to do the things with the Catholic schools. Yeah. But I worry that he sort of picked up a game halfway through the fourth inning and is trying to scramble and stuff like that. I think if he got re-elected, you see the true Scott Morrison the other side of that. I mean, from my own personal point of view, I think this question about the religious freedom thing, given what this guy's beliefs are, is something that's going to blow up. You know,
it'll be challenging for him to stand by and then prosecute.
I think really, really complicated. On the economic stuff at the moment, I mean, I think the Liberals have got themselves in a gigantic tangle over the NEG and what they're going to do on energy. I think it's immensely complicated.
Right. Now, you have said you've got rid of your boat envy. There's that marvellous picture, the thing you penned the other day. It was wonderful, and I think we've got a picture of it. That's you in the smaller boat. And why did you decide to write that article, Mark?
Oh, because it came out of a conversation with the editor of the magazine, and I was just talking about boat envy and the fact that I ended up on a kayak and it ended up being something that I'd got an immense amount of pleasure out of for a fraction of the cost, and all my friends that had boats spent huge amounts of money and didn't have a huge amount of pleasure because all they ever got was the phone call from the marina saying you need to spend more money.
So you got pain because you learned how to do this, and you know, really the hard way as an adult. Now you're just about to go. You're looking very fit. You're just about to go off and do the Cook Strait, which I've looked it up on Wiki, North Island, South Island of New Zealand. But quote, one of the most dangerous and unpredictable waters in the world. Are you nuts?
No. I've got a support boat with me. It'll be fine. We were out in gale force winds on the last Friday. It was absolutely fantastic. Yeah.
Do you think it's all part of your appetite for risk? Midlife crisis, of course. We're all going through that. But appetite for risk?
Not you. You're still 21.
Appetite for risk, Mark?
Well, I think calculated risk. I've had a huge amount of return out of it. A lot better than I think buying a ridiculously expensive boat.
Mark Carnegie, always great to get your views. Thanks so much for coming.
Thank you very much, Ticky.
Well, after the break, ASX heavyweight CSL feeling the pain. We'll get more from biotech entrepreneur Paul Hopper next.
You're watching Ticky on Your Money. Now, back to Ticky.
Yes, welcome back. Moving to business news now, and Freedom Insurance shares plummeting in today's trade after the company announced a sweeping restructure yesterday. Shares, as I say, plummeting around 25% today, and the company now losing around 80% of its value this year. Shareholders were informed of the imminent departure of CEO Keith Cohen and CFO Jenny Andrews, and the slashing of its workforce from 200 staff to around 90. Well, for more on this, let's bring in Your Money business reporter Leo Shanahan. Leo, this of course was one of the businesses that was covered in the Royal Commission, wasn't it?
Yes, this was front and centre of the insurance hearings during the Royal Commission, and of course Freedom were the company accused of, well, who did sell a policy to a young man with Down syndrome, and the Commission heard from his father. Awful. And more broadly, the practices of this company have all but been outlawed by ASIC. So as a result, there's really no business model for them.
Well, you
and
can't,
as
you
I
can't
said,
really survive through that as a public company,
yeah.
can you?
And as I said during the hearings, I mean, this is going to be a company that could well go under as a result of the Royal Commission, and it looks like it's happening.
Yeah, yeah, all right. And Gary Cohen, Mr. Cohen, actually departing as well, the CFO departing.
Yes, the CEO and the CFO departing as a result of these changes. Look, they claim that they're going to save around $30 million in total. I fail to see how this company can survive, given now their share price is about 9%.
Gosh. OK, look, another company in trouble today, in voluntary liquidation. Yeah. Max Brenner, you'd think chocolate would be all right.
Yeah, you'd think so, but it's not the industry. Look, obviously Max Brenner for years has been dealing with some difficulties. It's been pretty obvious. I actually got wind of something a couple of months ago about the problems Max Brenner were having. I made some inquiries. I was fobbed off. It's always hard to tell with a private company as to how bad things are, but the indications were they weren't paying their entitlements. Yeah. So as a result, look, there's reports are up to $50 million in debt. McGrath-Nicol have been appointed as administrators. I mean,
Max Brenner is now it's got a number of shops. It's not just Australian, is it?
No, it's actually Israeli initially. It's now based in New York. I mean, Max Brenner, unfortunately for them, were caught up in this ridiculous Israeli boycott a couple of years ago.
Yeah. Do you think that hurt them?
It obviously did hurt them at the time. There are a lot of people who stood up for them as well at the time. Beside the fact they're not even and Paul Howes among others, but they're not even an Israeli company. They're a franchise of an Israeli company. Yeah. So anyway,
so was it cost because they were in high growth mode at the beginning of the year, weren't they?
They were, and they were talking about opening extra stores. I mean, they've got about 37 stores and about 600 staff that are now at risk. They say they're carrying on, but look, I think they're a victim of a couple of things. Obviously, the tougher retail environment generally. Yeah. Where they're situated, they're in shopping centres. None of that is going particularly well.
Is it a dated concept? This is the question. Dropping strawberries into melted chocolate.
Yeah, I think it does have a kind of early 2000s, vibe about it. But also, I think Australians don't adapt well to coffee chains generally. I mean, talk to Starbucks about that. Yeah. They've basically failed in Australia. So as a result, I think they've been caught up in this. It'd be interesting to see what the administrators can pull out of the fire. Can they get a deal with creditors that can enable them to keep going? There was talk that a kind of Packer-associated entity earlier this year
a couple of months ago.
might have come up to save them. But look, it's you don't like the look of it, really, do you?
Yeah. All right. Well, Leo Shanahan, thank you very much for all that. Not a good day on that front. Well, in better news, this week a Nobel Prize was given to two scientists whose groundbreaking research into curing cancer was the first to look at how the immune system, rather than, say, chemo, radio or surgery, could play a role. Then today, we've been told that thanks to Professor Ian Fraser, Australia could soon be the first country in the world to be cervical cancer free. Now, wouldn't that be an amazing thing? Well, these are extraordinary achievements, aren't they? So it's heartening to see that biotech as a sector looks to be on the rise too. It's been a pretty patchy one, frankly, to be involved in for as long as I've been covering them. Now, one of the most successful biotech entrepreneurs in the world, I reckon, is Paul Hopper. He's based here, but he's been the founder, chairman or CEO of biotechs in the US, in Australia and in Asia, including a cancer drug developer, Viralytics, which he sold recently. And I'm delighted to say Paul Hopper joins me at the desk. Paul, welcome.
Thank you.
Tell us about the Viralytics story, because it is what you call your highlight, isn't it? It started, as a $4 million company, not in very good shape.
Correct. So this is a technology that was invented by Professor Darren Shafran at the University of Newcastle here in New South Wales, so it's homegrown. And many years ago, he noticed that when you give a particular virus, that is a virus associated with the common cold, to cancer patients, that it seemed to kill the cancer cells but left the healthy cells alone. And about 9 or 10 years ago, I was called by one of the shareholders in this company to give them a hand. It was in trouble, as you say. It was worth about $4 or so million, and it was broke, so I became the chairman.
You turned it around and flipped it for $500 million to Merck the other day.
Well, I didn't, but the management team, so we sold it to Merck for $502 million.
How did that happen? How did it become such, I mean, what were the stages that...
Well, so 10 years ago, the idea of injecting a patient with a virus to cure cancer was pretty out there.
Yeah.
And I remember in those days going around and seeing the institutional funds saying, would you like to invest? And they said, oh, well, it sort of sounds interesting, but come back when you have a little bit more data, because in the biotech game, it's all about the data. Does the drug produce the data that you're looking for? And as the years went by, it actually performed. This virus did what we thought it was going to do. And so we got a lot of support, and we got to a point where Merck, one of the biggest pharma companies in the world, said, we have to own that. And they made an offer and we sold it.
How's the sector going here in Australia? I mean, what have been the good things and what are still the challenges?
Look, it's the first thing you have to remember that in Australia, biotech is not an established asset class. So we're still raising the awareness here. Look, it's good and bad. The bad side would be maybe the news yesterday that Bionomics failed their clinical trial and the stock went from 50 cents to 17 cents. The good news would be that Certex was sold for $1.9 billion a month or so ago.
Extraordinary.
So it's mixed. But we have a flourishing industry here. We have good science, as evidenced by Viralytics. And it's a sector I think that's worth being in.
Patient capital.
Very patient capital. I mean, the development of a drug is a 10+ year investment.
I mean, I was talking earlier to Mark Carnegie about the $2.7 trillion of super that we do have here. I mean, is the biotech sector a good place for some of that?
In my experience, they're totally deaf to biotech. I lived in the States for many years, and I would come out here and I'd go and see the super funds, and they had very little interest in it.
Why? Too risky for them?
Too risky for them. I mean,
do you think that might change?
I hope so.
There's so much money. You'd think that there would be a proportion on the risk-reward fund that would be able to.
I mean, in America, pension funds invest heavily in the life science sector. It is an established asset class. There's thousands of analysts that cover the stocks. There's hundreds and hundreds of biotech funds that invest in it. So, look, 5 years ago, there wasn't a great deal of foreign investment in terms of life science funds in Australia. At Viralytics, we had OrbiMed, one of the biggest life science funds in the world. We had Abingworth in London. We had Cormorant Baker Brothers. So there is definitely a move.
And what about the national interest once some of these blockbusters take off, you know, blockbuster ideas, I mean, rather than drugs? Do we actually tend to retain it here in Australia and the value? Or are we still suffering from being bought out and patented out?
Well, I guess I have to be frank and say the two examples I just gave you, Viralytics and Certex, one's gone to China and one's gone to America. Look, I think most people that work in the biotech life science industry have a slightly more global view on it. I mean, it sounds very patriotic that, you know, you invent a drug and you keep it here, but the development of a drug is a massive enterprise requiring billions of dollars.
Like I say, we've got all this money here.
But they're not investing it.
They're not investing in it. You've got a point about boards as well on a lot of these biotechs.
Yes, I think after the quality and the scientific merits of a drug, the people that are going to run it are absolutely fundamental to the success. So in Viralytics, we had Malcolm McColl, who was the CEO, an outstanding CEO. We had Darren Shaffer, the professor. My concern with a lot of boards and managers in Australia is they don't have the domain experience in biotech, particularly the boards. So there's a lot of board directors who are sitting there who, in my opinion, have no business being there.
And do you have a view on whether a lot of these biotechs should be public or private?
Well, because the venture industry here for biotech is relatively small, everybody tends to go public early. So in the States, you do a Series A funding and a B and a C maybe, and then you might think about an IPO.
Is that one reason why there might be sort of more sort of reluctance to invest so early in the cycle?
Yes, because a lot of the companies that go public or they do a reverse merger, they raise small amounts of money, they run out, and then they have to go back to the market, and if they haven't done what they said they were going to do, the next raise is lower, and so people are put off by that.
So finally, what are you excited by about at the moment?
I'm excited about a number of the companies I'm involved in, which you would expect me to say. Imugene is an interesting company.
Did it get its raising away?
It did. We had a very large raising for that. And you mentioned about the two scientists who won the Nobel Prize, Jim Allison, who I had the privilege of working with a few years ago. He's in the area of immuno-oncology, which is basically using your own immune system to kill the cancer. Remember, in the old days we'd zap it with radiation or poison it with chemo or cut it out. And what he was one of the pioneers was he worked out that you could take the brake off the immune system so the immune system recognised the cancer as being foreign.
And do you think there are a lot of companies that might crop up in this area?
There is a land grab. My company, Imugene, for example, is in that area. It's the area I would be looking at. It's the hottest area in cancer drugs today.
Goodness me, it's a great space. Paul Hopper, thank you very much for coming in and explaining.
Thank you for having me.
After the break, talking the new NAFTA, actually the USMCA, with Jonathan Payne. Next.
This is Ticky on Your Money, covering the big business stories.
Yes, welcome back. Well, it was an 11th hour deal, but Donald Trump has himself a new NAFTA. Not called NAFTA, of course. It's the USMCA trade deal between Canada, the US and Mexico. When you think back to just June of this year, to the toys thrown out of the presidential pram in Quebec at the G7, it's quite an amazing journey, a Trump journey. Well, joining me from his take on how we should look at risks around global trade, and particularly the one big one left, which is China, US, Jonathan Payne from the Payne Report. Jonathan, it's great to have you here.
Thank you.
So were you surprised at the fact that Donald Trump finally has fixed NAFTA, and perhaps we can feel that this is less about protectionism, global protectionism now, and more about the art of the deal?
Yes, I think Donald Trump deserves an Oscar for his performance on this. He created a huge drama out of it, said it was the worst trade deal in history, and then, of course, reconfigured it somewhat marginally and gave it a new name, which sounds a little bit like YMCA, but so instead now we have to call it the USMCA.
Okay, it does sound right, YMCA, actually. Yeah, carry on.
The bottom line is there were some marginal alterations and modifications, because obviously NAFTA was a fairly old deal.
But enough for him to sort of gain some credit. And
correct.
Right, okay. So we're left with this huge spat that is going on between the US and China. Now, how would you analyse it, particularly for investors? How would you see it at the moment, the politics?
I believe the United States is now building what we could call a coalition of the willing. The main target for the United States is China. Always has been, always will be. In fact, I would best describe the situation now more as an economic war rather than a trade war. For the United States, it's not just that China has a significant trade surplus with the United States. The greater concern to the United States is that China is now a growing superpower that is beginning to flex its geopolitical muscles, and the hawks within the Trump administration and the hawks within the foreign policy and military establishment in Washington have been very concerned about the rise of China, and they feel it's now time to control, contain the rise of China.
What's the evidence for this?
The evidence for this is that in December of 2017, the Trump administration published the National Security Strategy paper. I was amazed it didn't get more attention. It explicitly, within the opening introduction of the document, highlights the threat that China poses to the United States, and in essence effectively accuses the Chinese of cheating. Further evidence, of course, is that we have Peter Navarro, who now has the ear of the president. Peter Navarro, of course, is the author of the book Death by China, published in 2011. And this is an individual whose life's mission was to basically declare economic war on China. Then, of course, there's Steve Bannon, the former chief political strategist, the intellectual godfather of American economic nationalism.
He was interviewed the other day, wasn't he?
Absolutely. And he stated it very explicitly that we are going to see a reorientation of global supply chains away from China. So they're looking to degrade the Chinese economy.
So we've got Mike Pence potentially coming on Thursday, do we?
Absolutely.
Yep.
To the Hudson Institute, one of America's leading think tanks.
Yes.
It's going to be very interesting to see what the Vice President Mike Pence has to say. I can't wait.
Yes.
And I think all China watchers, and I certainly know that Beijing will be listening very intently to the message from the US Vice President.
So, Jonathan, where does this put us? Because, I mean, I think we've sort of woken up to the fact that, well, we've got the South China Sea issue geopolitically. We've also got, you know, to our east, you know, a lot of interest in what's going on in, you know, all the way up to Timor, really.
Yes.
And we've got more investment and more interest from, say, the Brits and the French now, and us too.
Yes.
How do you see Australia coming out of these tensions?
My view with respect to this issue, and it's one that we talk about a lot, obviously, is that I'm not willing to give any advice to anyone in Canberra, but if I was Australia, I would lie low at this present time.
Yes.
I think we have very strong relationships with, obviously, the United States. We have very strong military and historical ties, and of course China is our largest trading partner.
Now how sore is this going to get, with us sitting on the fence here?
Well, it depends on our position, I think, with respect particularly to the South China Sea.
Yeah. I mean, we knocked back Huawei the other day, ZTE,
yes.
right?
Yes.
That was quite a significant decision.
Yes.
But we've changed prime ministers now. We've, moved on with foreign ministers as well. How do you see this government playing it?
I think that within the foreign policy and military establishment in Canberra, that the hawks are on the rise. I think 3 or 4 years ago, Ticky, if we had this conversation, I think the kind of view in Canberra would be much more kind of very quite relaxed. However, things have changed in Washington, and things have changed in Beijing, and things have certainly changed in the South China Sea.
Can we be confident, you know, as investors investing in companies who really depend on that relationship with China, who are growing their exports straight up there, particularly, for example, in the agricultural and ag business space?
I believe that China sees Australia as a vital source of resource supply.
So it'll be a pragmatism that...
Very much. I think the relationship between Canberra and Beijing will be one governed by pragmatism and realism. And again, I think although the hawks are on the rise in the kind of political and foreign policy corridors of power in Canberra, the business community here in China, here in Australia, wants to maintain strong, open cords of communication with Beijing.
Yeah, our business is worried, though.
It is worried, but the simple economic reality is that we have an extraordinarily strong relationship with China, and I don't see that changing over the next 5 to 10 years. However, I think in the medium term, if we can define the medium term as 2 to 3 years, we're in for some choppy waters.
Where does this leave the current ratcheting up in the trade war? Going back to the trade war between China and the US, because we're currently at a level of $200 billion worth of goods, tariffs on that.
Yes.
Is it going to go all the way to $500 billion?
Yes. I think Donald Trump's going all in. The advice from Peter Navarro is to go all in. The Trump team believes that China is vulnerable, and it is, because it's pursuing a much-needed program of deleveraging.
Yes. So who's going to blink first?
Well, in fact, I don't think either side's going to blink. I think there's just going to be a continued deterioration. And also, we mustn't lose sight, Ticky, of the midterm elections on the 6th of November.
Right, absolutely. They're coming up, aren't they?
The anti-China card is Donald Trump's Trump card. It plays well with his political base and, moreover, has full, broad, bipartisan support within Washington and Congress.
Yeah.
So everything is geared up for an all-in escalation between the United States and China. On January the 1st next year, I think Donald Trump will impose or increase tariffs from 10% currently on that $200 billion he announced the other day, up to 25%. And then we're going to see another iteration in the escalation.
That's fascinating. Jonathan Payne, thank you very much for your views.
Thank you.
Well, after the break, going to the UK, and Boris Johnson slams Prime Minister May's Brexit plan. More on that after the break.
Now, back to Ticky.
Well, let's head to Britain now, because a former Foreign Secretary, Boris Johnson, has criticised his Prime Minister's Brexit strategy in a speech to the Conservative Party conference in Birmingham, in what some supporters feel was an audition for a leadership bid. The former London mayor received a round of applause after saying the country can do better than Theresa May's Chequers plan for leaving the European Union.
It's this backbench MP who everyone's come to see.
Have you peaked too soon, Mr Johnson?
Not exactly below the radar, an entrance designed to steal the show, and not the type of opportunity the Conservative Party was thinking of. Crowds delighting in his showman's style. He started off with a self-deprecating joke.
I want to congratulate my friend Philip Hammond for predicting that I will never become Prime Minister. Yesterday I saw he said it, which is the first Treasury forecast in a long time, I think, to have a distinct ring of truth. And
But despite that, he was here with a vision beyond Brexit, in what felt like a pitch to succeed Mrs May.
It's only by making the streets safer, and by the way, I don't think it's time we brought back systematic stop and search to end the politically correct nonsense.
All the while hoping his Brexiteer-in-chief credentials will help get him there.
There is time. This is the moment to chuck Chequers.
Trying to change Brexit policy, but with one eye on a bigger prize.
I think he'd make a good Prime Minister.
Of course he would.
Of course I'm proud of him. Very, very proud of him.
Well, it was a speech about who we are.
Do I want him to be Prime Minister? I think my gut feeling is yes.
But perhaps more telling than the speech itself were the moments before, cameras capturing Mr Johnson taking in the crowd. Waiting in the wings, timing is now everything. Beth Rigby, Sky News.
Well, for more, Michael Hewson, Chief Market Analyst at CMC UK, joins us live from London. Michael, my goodness me, that was it was supposed to be on the sidelines, but it was Boris Johnson. How is the market taking this? Is it just another carping about Chequers, or is this really a bid for the big job?
Yeah, I think I was struck actually by the tone of his speech, in that he actually got behind Theresa May. So I think if he is looking for the job, I think he's playing a slightly longer game, and I think that's really why the pound has reacted fairly calmly. UK gilts have reacted fairly calmly. You know, I think, yes, he is charismatic, but I really don't think that even if he is pitching for the job of Tory leader and Prime Minister, that he has the underlying support amongst the MPs within the party. Let's not forget the arithmetic here within the Conservative Party. He needs 48 votes to trigger a leadership contest. Once he then goes onto the ballot, he needs to get 159 Tory MPs to actually vote for him as leader. He is very polarising within the Conservative Party, and for that reason alone, I think it's very unlikely that he will become Prime Minister. Ultimately, I think it's very, very true that he who wields the sword usually doesn't get to wear the crown. And that was certainly the case, I think, back in the 1990s when Margaret Thatcher was finally replaced by John Major. So, you know, he can vent all he likes. Ultimately, he doesn't have the necessary support, in my opinion, amongst the MPs. He may have it amongst the grassroots, but even there are signs of fracturing within the grassroots, because I think that I have detected some murmurings that ultimately, while he is very charismatic, he's not particularly detail-orientated. And if you want evidence of that, just look at his performance as Foreign Secretary.
Right, OK. Well, so he though, you know, as you say, he's had one crack at the title. He was betrayed by Michael Gove, who I don't think there's any love lost there even now. There would be a whole rump of people in the party who wouldn't want him to be running Britain. But while you say he supported Theresa May, he supported her position on Brexit when she originally put her position, which is closer to the Canada Plus deal that others and he are looking for. He wants to chuck Chequers, which is her current position. So she presumably is pretty cross about this.
Yeah, she is. She was interviewed on the BBC last night, and while I think she was fairly downbeat in terms of the fact that, you know, she was, how should we say, a little bit cross about it, she also said Boris is Boris. And unfortunately, I think that is something that any prospective Tory leader is going to have to live with. But let's not forget, he's a backbencher now, so there's not really much Theresa May can do to sanction him. So I think what's going to happen now is ultimately Theresa May is useful so long as we get past or get up to the March deadline. Up until then, I think it's unlikely that there will be any significant attempt to replace her. But as with everything in politics, you know, things can change very, very quickly, as you guys only know too well.
Yes, indeed. Now, when I watched a little bit of Boris Johnson's speech there, one of the places he got quite animated was when he said, look, it's no good people thinking that we can do a sort of Chequers-style deal and somehow then in the future change a few things that we don't like. You know, this is it. This is the moment. Do you think that's right?
To a point I do, but he's talking about the future trade relationship, and unfortunately we can't really start talking about that until the thorny issue of the Irish border is resolved. And at the moment that's becoming a very toxic and vexatious issue. And I think over the course of the next few days we may see some progress on that. But, you know, until such times as that particular issue is resolved, all this talk about Chequers and the future relationship, I think is pretty much moot.
Yeah, all right. Well, the Irish border, obviously, the Europeans have been doing their best to create mischief there and create a big thing about it as well. But if the Chequers deal does get over the line, what does that mean for free trade opportunities outside of Europe for Britain, including Australia?
Well, that's the thing, isn't it? It's really a question of whether or not the UK can ink its own trade deals you know, beyond a potential Chequers deal. But ultimately, let's not forget, at the moment, what we need to resolve, and I think the timeline is important here, Ticky, we need to resolve the Irish border, then we need to get past the March departure date, then there's a transition deal beyond that, which takes us up to 2020. So we do have time to iron out the future relationship. Obviously, the transition period will keep the status quo, but in terms of the timeline, I think the most important issue at the moment is really about resolving the Irish border. And at the moment, I think there's glacial progress on that, but obviously she has to balance a number of different balls, keep the Democratic Unionists side, keep those on both wings of her party on side. And that's before we even start talking about the Labour Party, which is also split on this issue.
And they want a second referendum, I think. Anyway, Michael Houston, what a mess. Thank you very much for joining us again.
Please, no. OK, thank you.
All right, turning to the US now, and there are reports Donald Trump was personally involved in efforts to stop Stormy Daniels from going public about an alleged affair. According to CNN, the then presidential candidate gave direct instructions to his lawyer about the matter.
Tonight, a source with direct knowledge tells CNN President Trump personally directed an effort to keep porn star Stormy Daniels quiet about a sexual encounter she says she had with him in 2006. In February, the president called his now former personal attorney, Michael Cohen, and instructed him to seek a restraining order against Daniels through a confidential arbitration proceeding in California.
Hi, everyone.
This after learning she was considering talking to the media, despite the $130,000 hush agreement she reached with Cohen weeks before the 2016 presidential election. That means Trump wasn't telling the truth 2 months later in April when he denied knowledge of the payment.
Did you know about the $130,000 payment to Stormy Daniels?
No.
Why did Michael Cohen make it if there was no truth to her allegation?
Well, you have to ask Michael Cohen. Michael's an attorney, and you'll have to ask Michael Cohen.
Trump has consistently denied any affair with Daniels, who spoke with Anderson Cooper about the alleged encounter in March.
And you had sex with him?
Yes.
You were 27, he was 60. Were you physically attracted to him?
No.
How do we know you're telling the truth?
Because I have no reason to lie.
The source says Trump directed Cohen to coordinate the effort involving his son Eric Trump and an outside lawyer, telling Cohen regarding legal costs, "Don't worry, I'll pay for everything." The Wall Street Journal, which first reported the story, says the president days later had a second phone call with Cohen in the Manhattan office of the outside lawyer, Lawrence Rosen. Eric Trump, who runs the Trump Organization with his brother Don Jr., told a staff attorney in California to sign off on the arbitration paperwork Rosen's firm prepared.
This state arguably...
A person close to the situation told the Journal Eric Trump acted as the president's son and not in his role as a company executive. On March 6th, Daniels sued President Trump and the company Cohen had set up to pay her, Essential Consultants, LLC, alleging the hush agreement was not enforceable because Trump himself hadn't signed it. The next day, White House Press Secretary Sarah Sanders said the case had already been won in arbitration.
I can share that that the arbitration was won in the president's favor, and I would refer you to the president's outside counsel on any details beyond that.
In fact, a restraining order was issued, but Daniels ignored it.
So much news for just one man. Well, that's all for the show tonight. Tomorrow night, Bank of Queensland's CEO John Sutton on his results. Until then, thanks for your company.